Alright, guys, thanks for tuning in. So, we're just going to talk about some of the setups that I'm looking for this week. We'll go over the calendars first. So, Monday, we will have Powell actually speaking. We also have ISM manufacturing PMI coming in, which is going to be important. They're expecting a forecast of 53.3. Tuesday, we're going to get Euro core CPI as well as CPI flash estimates. We're also going to get Government Bailey speaking for the pound. This will be important to kind of understand where the Bank of England is really positioning themselves in terms of fiscal policies, etc. So far, they haven't, they did say a few things here and there about inflation, about gilts being higher being a good thing for the pound, right? But there's also a lot of other issues that needs to be clarified there. So I'm pretty certain he'll be clarifying that on Tuesday. Australian dollar, the Aussie on Wednesday, we're going to get GDP quarter on quarter data. The BOJ is also going to speak, which is going to be important, but I think most of us are going to expect a more hawkish tone, anyways. We're also going to get the ADP non-farm payroll or non-farm employment change, excuse me. The ISM services PMI as well on Wednesday. Thursday, RBA will be giving their talks as well. Bailey is going to speak again. And on Friday, we got some Canadian employment data or labor data. And obviously, we'll have non-farm payroll and average hourly earnings for the US dollar, including the unemployment. So yeah, very important data coming out for the week. So just keep an eye on these data releases and as well as talks. So I won't be going over too many of the currencies here. Most likely I'll talk about those that are aligning to our setups here, which would be the euro, the pound, the yuan, the Aussie dollar, the Kiwi. So we'll start with the yuan first. So overall, we're expecting a more hawkish stance, obviously, by the Bank of Japan. So we have about an 81% expected hike for next meeting in June. Overall, macroeconomic wise, we are pretty neutral, pretty flat here for the yen. Euro wise as well, expecting a hike in the next meeting. That is that overall. Okay, that's that. Economic wise, we are. It's not really amazing either. We're kind of neutral as well. GDP growth is flat. We have manufacturing PMI lesser than expected. Services PMI came in soft. Retail sales did come in a little bit better here. CPI flat. PPI did increase. Unemployment flat as well. So overall, pretty flat for the euro. And an interesting point as well that ING actually came out with their report recently, which I'm going to take a quick screenshot here. And essentially, let me just take another screenshot here. So, essentially, overall, they just talked a little bit about how the oil price, they did a regression model and they realized that the more that oil prices are actually elevated here, it actually increased at about 1 basis point for the 2-year euro inflation swaps. So even though oil prices have sold off so far in the week, but because it's still relatively elevated, inflation swaps are actually still increasing, right? So the issue now is, okay, we understand that the ECB they've been talking about hiking rates, they've been pretty clear about it, but at the same time, they are also pretty weak in terms of their economic growth dynamic. So according to ING, they don't really feel that the ECB will fight this supply shock at the cost of their worsening economic downturn, right? So that's an interesting point. I think for most central banks, they're not going to want to affect their growth to control. I mean, if their growth is obviously affected economically wise, even though there's inflation, they'll probably look towards supporting the growth side. That is ultimately the most important part. I mean, inflation is always going to be there regardless, but if the economic of a country is actually, fading, right? Growth is fading, it's weakening, um, labor market is getting affected. These are going to be huge problems for the country, and that's something that needs to be taken care of. So I thought that was an interesting point there by ING. Um, some community members also have been kind of open to the idea that they will hike rates. So we're kind of in that in between now, right? Of course, if inflation does really get out of hand, I think that it really just depends. It's a very difficult situation to justify, but overall market consensus is they're expecting a hike rate. So that is the euro side. For the Aussie, so yeah, I mean, I think most would understand that as of recently they've been getting a cooling labor market. I think inflation is really now affecting everyone in Australia, and so RBA hike pricing actually dropped quite a fair bit here. Um, Overall, Chinese retail sales growth also slowed down, which does affect the Aussie side because it accounts, China accounts for about 30% of Australian exports here. So if China gets weak, obviously they're gonna start to reduce, their um, you know their purchases from the Australian side, which will also naturally affect Australia's revenue, obviously. So that's obviously bearish for the Aussie side. So a lot of these points here, I'm not going to read all of them right now, but it's all kind of tilting towards weakness on the Aussie side, which also kind of leads towards a more dovish, potentially tone for the RBA as well. I think overall inflation is still extremely elevated. I believe they're over 4%, but they're also getting an increase in unemployment, which is the highest since 2021. And overall employment actually did fell as well. So that's obviously not great for the Aussie side. We can see that based on a Z score, they're also very stretched in terms of positioning across all currencies. So Aussie is extremely overextended. And yeah, looking at the economic on the macro side, we're actually tilting a little bit more bearish as well, which kind of leads to our point we were just discussing earlier. So GDP wise, did come in better than expected. Manufacturing PMI came in soft, services PMI came in soft, retail sales came in very soft. We can actually really see the decline in retail sales now because of the inflationary issues that we've been facing through the Middle East. It's starting to get priced in for the Aussie side. CPI is more or less flat. PPI actually did reduce as well, and the unemployment rate actually did increase. So if you guys know, the RBA actually did a three increase hikes. I believe they did three hikes this year. So they did a lot faster than a lot of the other countries, and they wanted to take a more quicker and hawkish, stance early on to kind of handle the inflationary pressures. They didn't want inflation to get carried away, and I think you can see that it's actually starting to work out, but it's also affecting their economy. And so it'll be really interesting to see what they are looking towards. I believe that for the most part in next meeting they're actually going to hold it, but if we do see um, weakening economy growth from the Australian side, I wouldn't say that they'll probably hold rates. I think they will probably cut rates, right? So we'll see. I mean, at this point, there's not enough data to really show that, but we definitely start to see some of the bearish indicate. I mean, some of the actual inflationary pressure starting to creep into some of our growth here, right? So I'm pretty bearish on the Aussie right now, personally. Um, Kiwi, right now, overall, uh, they're still at 2.25% in terms of their current interest rate. They have delivered a more forward guidance approach. I believe they had a split of 3 to 3. So three were wanting to hold rates, and the other three was actually wanted to actually hike rates. So I mean they're basically one vote away from an actual rate hike. So it's a very strong forward guidance from the committee, from the RBA and ZEC. I mean, and yeah, definitely it's signaling more of a intense tightening stance, I would say. But overall, we're still getting a 50%. Market participants are still pricing in a hold, about 50%. Um, but I do think that we're gonna get a little bit more of a hawkish stance as well on the Kiwi. Um, Macro wise, we can clearly see here that GDP growth is weak, manufacturing is flat, services actually came in soft, retail sales actually had a nice increase here. CPI came in hotter than expected, PPI as well came in hotter than expected, and unemployed actually did decline very modestly here, not by much. So we do have some inflationary figures here. I mean, we have CPI, we have PPI, retail sales. Um, yeah, so we do have some inflationary issues here. And yeah, I mean, a lot of the central banks are very worried as to how bad this can be, right? Because the inflation that's caused by the energy shock is, something that can last even if the ceasefire did actually occur. So we do not know how bad this can really get, especially for currencies that are actually getting really affected by the current inflationary issues, which are most of the currencies, obviously, if not all, I mean. But some are declining, some are increasing. But that is the Kiwi side here. As for the pound, I'll talk about the US dollar as well, but the pound here, I think we need a little bit more information. I mean, they're scheduled to speak on Thursday, so nothing much there. But for the most part, they're expecting to hold rates for the next meeting here. And if we go to the economic heat map on the UK front, overall we're getting a pretty bearish reading here. For the UK, we are getting a neutral reading on the GDP side. Manufacturing PMI is overall bullish. Services PMI is getting affected. Came in soft. Retail sales is soft. CPI actually came in soft as well. PPI did come in hotter than expected, and unemployment as well came in soft. Right. So overall, growth-wise, not great. Inflation is, I mean, we're getting hotter than expected PPI, which will likely roll over into the CPI side. I know, labor market is also getting affected. So, on top of that, the UK is having a ton of political instability right now, right? Between the Prime Minister Starmer, obviously, lawmakers, I mean, the investors are worried that lawmakers will actually consider potentially maybe changing prime ministers, right? And everyone's not really trusting the UK government right now. That's why we're seeing gilts market actually rise up pretty rapidly here, which has been, I would say, controlling. I mean, it's a good thing in terms of inflation, but it's also showing that investors want a higher risk premium because of the amount of risk that's happening right now in the UK. So I'm still very, very bearish on the pound. I just don't think there's any reason to be bullish at all, to be honest, for this particular currency. So that is that. And the US dollar. All right, so interesting enough, I mean, PCE, to be honest, it did rise month on month, but I mean, for the most part, I don't really see anything too crazy, to be honest. I mean, we can go back to the Forex calendar here. Wasn't really crazy numbers. I was actually expecting a higher PCE number, but we didn't really get that. As we can see, we actually was softer than expected. Preliminary GDP as well. Yeah, I mean that one is the GDP side, but PCE wise, I believe the year on year did increase by like 0.1%, but overall month on month, it came in a little bit soft, but overall still elevated, obviously, but it wasn't as elevated as I thought, right? Um, Obviously, yeah, they still retain a hawkish bias overall. yeah, this is just talking a little bit about how savings ratio actually did decrease overall, so people are sort of um, having lower savings ratios here. Yeah, so energy driven spending blah, 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 has actually squeezed consumer spending. All right, this is talking about real households. And okay, that's that. All right. As for the economic heat map here for the US dollar, we're overall getting a bearish reading here. All right, we are getting a weaker GDP growth, weaker manufacturing PMI, services PMI, retail sales is flat, CPI is bullish, PPI bullish, PCE is flat, wage growth weak, unemployment rate flat, initial jobless claims did come in soft, job openings did increase very modestly here. I mean, not by much. ADP bearish, and NFP came in hotter than expected. But yeah, nonetheless, overall, we are getting a little bit of a bearish reading on the greenback currency here. But I still think against the pound, which is one of the plays that I'm looking at to short, I do see that the pound would probably go lower. But I'll discuss a little bit about some of the risks that we need to look at. But for as of now, those are some of the currencies that what's been happening so far. And all right, now coming towards the place here. So Nikkei wise, I think we have a really nice chart here from the daily. The weekly wise, we are extremely overextended. As you can see how it's moving very, very far away from all of the moving averages. We're seeing that the moving averages are also kind of widening apart. So I wouldn't be surprised, to be honest, if we do actually get a pullback here on the Nikkei, a deeper pullback than what I'm actually anticipating for. But nonetheless, the Nikkei is also having a very, very high institutional positioning. Actually, I think if not, it's like at the top right now. Let me just bring up the COT report here. You can see the Nikkei is about 88.78% long. Still having a pretty positive net positioning. We did get a little bit of a decrease in long contracts, but we also have a decrease actually in short contracts as well. But overall, the Nikkei is still heavily overcrowded, to be honest. So I wouldn't be surprised if we do actually get a bigger sell-off. But what would really drive this play up, right? So it would be likely the de-escalation from of the Iran and US war, which I mean I'm not gonna say it's gonna happen or not gonna happen. It's hard to say. I mean personally, it feels like it seems unlikely, but it's hard to really read the situation, to be honest with you. But if we do get a de-escalation, I mean, we may not even get a play here, right? I mean, if we get it on Monday, this is just gonna keep running. But the idea is, yeah, we would like to get a pullback right into our key area here. And hopefully if we do get some sort of de-escalation, we can see a push up. But look, even though we've been getting the Middle East issue has been sort of happening since February, we're still seeing higher prices, and that's largely driven by obviously the AI craze, semiconductors, etc. But overall, I wouldn't say this is a extremely high odds setup. The fundamental drivers are not extremely strong for the Nikkei. Obviously, for the most part, I think the rate hike is already sort of priced in. I mean, everyone is already pricing in a rate hike anyways, and the Nikkei is still rising up because of the fact that markets are a little bit more optimistic that the war may end, which obviously feeds into more bullishness for the risk on asset side. We're obviously seeing a ton of institutions still very, very heavily bullish on the Nikkei, but yeah, we'll have to see. I mean, at the end of the day, it's still very, very overextended. It is a very nice chart, but I wouldn't be surprised if we actually do get a deeper pullback. Maybe looking at daily, maybe somewhere even towards this area here at the 54 range. And then maybe price will continue moving up. We'll see. But if we do not get a de-escalation and things actually get worse, I do believe that there's some missiles that has been fired already by excuse me, by Iran towards the airbase in Kuwait. I think a few US soldiers actually got injured, so that's going to be a huge problem. So we might even get a gap down here on Monday. But we'll see how serious it gets. Obviously, if those things are happening, it's really going to affect the Nikkei, and I probably wouldn't be looking to fully long it as well until things blow over. But for now, that is the Nikkei trade. Now Euro AUD would be the next one. This will be the last long here for my current watch list. The rest will be short. So the Euro AUD side, yeah, we know that the euro is looking to hike rates in the next meeting. AUD is looking to hold. Um, so there's definitely some hawkish play there, but I still personally don't really find a very strong case for the euro fundamental wise. I mean, I think both currencies have weak fundamentals, but obviously euro is slightly better than the Aussie side right now. But they are expecting weaker growth, forecasting on the ECB side. Retail sales long is slightly better on the euro side as well, but still negative. I mean, overall, um, yeah. So I think the real play here would really be the hawkish move and some sort of, um, any sort of. I guess you can say if there's any sort of negative headline, um, for the really strong negative headlines means there's like real war happening right now on the US and Iran side. They're literally fighting back and forth. I mean, soldiers are deployed. They're really going to go for war here, and I think that's really going to drop the Aussie dollar, and I think that's going to flip the euro long. So I wouldn't say just because, I mean, so it's really just it's by a geopolitical play and a bit of hawkishness from the euro side. That's really the play here. um, but it's, I mean, other than that, it's really nothing going on. Overall, I would say that long term, growth wise, I mean, GDP growth, they're expecting growth in Q2 26. Not Q2 26, excuse me. Over the next few quarters till Q1 of 27, euro is actually forecasting some stable to ascending growth. While the Aussie is actually looking to take a really big drop in GDP growth in the second quarter of 2026 from 0.8% to 0.2%, which is extremely bearish for the Aussie side, which obviously further adds to the weakening growth in the Aussie dollar. So, but if we actually look at the economic strength index here, overall we're still getting a very bearish reading. Weaker GDP growth, unemployment rate, interest rate, etc., CPI. As compared to the Aussie, I mean, the Aussie is just neutral, but that's something to take note, right? I mean, long term wise, we're actually seeing a bit more bearishness coming from the euro, right? So whether that's going to be priced in now or not, that really depends. A lot of this chop is really caused by the fact that we've been getting some positive outlooks and optimism, so therefore the euro actually started to sell off and the Aussie actually started to push, right? Now, like I said, if we do not get a positive outlook, markets start to reduce their optimism, then we're definitely going to see the euro move against the AUD side. But it's just that the risk is based on these headlines, based on the market sentiment. Anything can really happen in this play, right? So this is not like my high potential great play. I mean, this is just something that I mean, if there's a play there, I might take an entry. But that would be the Euro AUD side. So AUD, next play will be AUD NZD. So the next ones will be the shorts from now on. The next few plays that I'm going to showcase here. So AUD NZD, a good setup here. Only thing about this is that okay, we look at it from a technical standpoint, it is really overextended. I do feel that we're expecting at least a pullback here because of some of the bearish sentiments that are coming from the Aussie side. Obviously the Kiwi is a lot more hawkish, even from their forward guidance, right, which is obviously different from the Aussie side. I think the Aussie side is looking towards more of hawkish, but also sort of possibly leaning to dovish side. I mean, it just really depends, but they're definitely not as hawkish as compared to the Kiwi. The daily is also rather bullish here overall. But nonetheless, this could be a start of more downside. Um, so I am looking for that as well. I still am quite bearish on the Aussie dollar, and yeah, so yeah, so I do believe that there is some potential play here. We are at the beginning of the move, but this could be an early type short idea, and we could actually see some really strong downside. Credit Agricole actually report actually came out on the AED and ZD side. They are super bearish on this pair, and they stated that it's really coming from some of the easing on market tightness in the labor market, which we did speak about earlier, and also changes in taxing of residential property, which obviously will lead to lower housing prices, directly lowering inflation, and knocking on wealth effects, weighing on consumption, right? So obviously less money flowing to the consumer would look to tighten their overall spending, right? So um nonetheless, yeah, I mean, I think this is still going to be a good play here. I am expecting a pullback or a retracement to the 50 area, to the 61.8%, and I'll just write it down from there. Okay. All right, next play, GPB USD short. So yeah, right now I am looking to hopefully see a nice break of this particular candle here, and I'll look for a potential entry. I did take a short during this period. Obviously we did have a little bit of a pullback because of the positive optimism of a potential talk, right? So markets actually started to sell off the US dollar. Um, but now that's already priced in. I think over the weekend we have been having some crazy things happening so far. I think Iran actually did, like I said, fire at the US base in Kuwait. So we want to see really how is that going to be affected on Monday, right? Where we see a gap down here on the pound. It's possible. It's possible. But nonetheless, yeah, I'm going to be shorting pops. It's just a little bit risky to short anything that has, shorting USD crosses, because yeah, obviously any sort of news is really going to affect this particular play. But that's just how it is for most FX plays anyways. It's a very tough market, so definitely risk, make sure you trade with controlled size. But that would be for the pound and the US dollar. And the last play here would be the pound and Kiwi dollar. So yeah, look, I mean, I'm not gonna lie, the chart is extremely bullish on the weekly. The daily, to be fair, the daily is it was bullish and now it's sort of neutral, but we are seeing price below the moving averages. So even though we're not really getting a strong bearish sign yet, but you can start to see that the shorter term moving averages are starting to converge towards the longer term moving average, which is the 200 MA here, and we also see a really nice sell off here as well. So like I said, I do feel that this is possibly a good start of a short. We've been really strong so far on the pound to the Kiwi dollar, and I think this is going to be a really nice short, to be honest. I mean, we had a really nice sell off, so I'm looking for a pullback and a retracement towards our area here of the 50 and 61.8%. Right, so those are the plays for now. I would say that the setup grade I would give the pound Kiwi would be the an A setup. Pound US dollar would be a B setup. Overall, because of the slightly more bullish weekly and daily chart, and as well as the fact that we are directly correlated to obviously the war, right? We're trading USD crosses here, so it's obviously going to get affected a little bit more. Not that the others wouldn't get affected either, but yeah, we'll give a B for that. Aussie Kiwi we give an A, Euro AUD we give a C, and Nikkei we give a B grading. All right, that is it. Cheers.